Okay. So, Pado, I feel I know say I know like na in first class. So let's proceed now. Okay. So the first thing that I want to show you people in trading as a
Then I say,
beginner, the first thing that I need to know as a beginner, if I if I ask, I know you already know about this chart. I've been posting it to see it, but the first thing that I need to know
the person
to
don't get
trade
it
to trade this market,
or
the
for
first thing that I
something.
need to know, you need to know how to read these
Also,
candles.
well,
I might if you mute your mic more.
is it not for him?
Uh, the first thing you need to learn is how to read these candlesticks. This candlestick. So I will just show you a brief example how these candlesticks are formed and how you can read them. So first of all, you need to know what is a candlestick. This is a candlestick. This is how you see it. Let me draw it with my. This is how you see the candlesticks. This candlesticks, this long things. These are candlesticks. So this is how they are formed. You normally see them like this. There are some that you see them like this. This is my pencil, the pen pencil. See them like this. Uh, you see some small wick on it, and you see another one like this. Don't mind my drawing. I'm using but a mouse. See another one like this. Because these are candlesticks. These things are candlesticks. So these two candlesticks that we are seeing like that, they look the same, but they having two names. But this one, we call this one like this. We call this one you can call it a bullish and bearish candlestick. Okay. This one is a bullish candlestick and this one is a bearish candlestick. So to make it easier, let me mark this one. Let me mark this one red. It's just a first class, so it's not going to be hard. Just know these two candlesticks, how to differentiate them. Okay, this one we read, this one going down is a bearish candlestick, and this one is not a bullish candlestick. Also, I can add another bullish candlestick here. Okay, let's say these three are candlesticks. So what you need to know is that this one is the body of the candlestick. This one is the body. And when you see this wick, you call this one the upper shadow, or you can call it a wick. The upper shadow, or you can call it a wick. So, and this wick, this place is where the market is opening. This one, market, the candlestick can open from here and goes down like this and form another wick and finally close and give you this body. That means this is the high of the candlestick, this is the open, this is the body. This is the low of the candlestick, this one, and this is where the candlestick is closing. So let me just let me mark it so that I can, if you are like jotting, we can just write it up, write it down. Okay, this is a candlestick. Let me go to a real example. Is it this candlestick like that? This one is this one like that. This place. Let me mark it. If you have anything, you can just jot so that next time because I will not show candlestick. This place is the market open, and this one is where it closes. This down shadow. This where it closes. This one, and this one is the body. This one is the body. This one, this inner part is the body. And wait, this one, okay, this one is the low. And which camera am I using? Sir? If you want to ask anything, you can just on your mic, you ask, then we continue while I'm explaining. So this way the candle is closing. This one is the low, and this one is the high. Okay, let me write the names. Okay, let me write the name. This one is the shadow, the wick. That's it, the wick. This one, the upper shadow now. This one is the upper shadow of the candle. That's the upper shadow of the candle. And we have the lower shadow of the candle. This one is the lower shadow. This one like this. One is the lower shadow. Lower shadow. That's the lower shadow. Then this one, this middle part is the body of the candle. The body. Let me write it. You can just mark this one because I will not. If you can write it somewhere, the body. This is the body. And this way the candle opens. This place. This way it opens. This way it opens. Where we got enter. This way it opens and closes here. This way it closes. Okay. So this is just a this is just an example of a candlestick and the names and the function because when you trading, you will see all these candlesticks, and you'll be wondering why some are having this shadow, these upper shadows, and some are not having. So candlesticks that are having these upper shadows just means that the market can open from here, then form this body, or it can open from here, go up. The buyers push the market up. When the buyers push the market up and the sellers take the market down back, it's going to form this upper shadow. That's why you see this long shadow here. And the sellers will push it down. When the sellers push it down to this extent, the buyers will struggle to push it up a bit. So the market will now form, this candlestick will now form this body and the upper shadow with this lower shadow. And there are some candlesticks that don't have shadows. They just form a full candlesticks without shadows. So you see those type of candlesticks too, like this one, like this candlestick. You can see it shows that the bearish are having strength. People that are selling the market now, they're having strength to push the candle down. You just open from here. The buyers push it up a bit, then the sellers set in. So the market sold and formed this one full candlestick. And these candlesticks too, we used to use it like confirmations to enter trade. These are confirmations to show that there are sellers in the market. So for these ones, you can um just jot this one down. Let's go now to the market structure. Let me show you now how the market is moving. Market structure. There's one book on the group, in the group, there's one book in the group that I'm using the book too. So if you are not understanding anything, you can check it in the book. I'm just using it because I want to facilitate it. Everything, I'm already having everything in my head. So let's go now to the market structure. So this market that I seen that I just chart, there are three types of market structures. You have the bullish market, the bearish market, and the bullish, bearish, and we have another market that consolidates. So for the bearish market, for the bullish market, you see something like that. The market is forming higher highs, lower low, higher highs, lower low, higher highs. When the market is forming these lower lows and higher highs, we can call it the bullish market. This is a bullish market when the market is going up. And when we have a bullish market like this, all we do, we buy. When we have a bullish market, we buy. When the market breaks a resistance and reverse to a support zone, we take your buys from here in a bullish market. So when you have a bullish market, you only look for buys. You only buy from here. That's the only thing you do when the market is bullish. Your work is just to be looking for buys, how to buy the market. So this is a bullish market. Now we have a bearish market. This is a bearish market. Let me give you an example of a bearish market. This is a bullish market, and once the market break this trend line and start forming lower lows, higher highs, lower lows, we call this one now that a bearish market. We call this one that a bearish market. We start looking for sales. This is our trend line. This trend line is used to mark the market trend where the market is trending, whether it's going up or it's going down. So when it's going up like this, we call this one a bullish market structure or an uptrend. So you can jot it down. We call this one a bullish market structure or an uptrend. And when it's going down like this, we call this one a bearish, a bearish market or a downtrend. So is it, let me just jot it, change the color to blue. When the market is trending up like this, yeah, we call this one a bullish market or an uptrend. And when it's trending down, we call it a bearish market structure or a downtrend. And when the market is bearish, please, as I'm going, if you don't understand anything, you can just unmute your mic and ask a question. When the market is bearish, we look for sales only. We look for sell opportunities. We look for sales. Well, our work is just to be looking for sales. When the market is bearish, you look for sales. Like when it's bullish, you look for buy. And when it's bearish, you look for sales. I don't know so far. Is there any question before I continue? Favor, Fado, Diamond. I know I don't say we don't pass the site.
No,
Nah,
I didn't understand, sir.
yeah.
We get number, say now. What you
Diamond, do you have any question?
No, there's no question.
I don't have any question.
Okay. So far you have understand the uptrend and the downtrend. That's a bullish and bearish market structure.
Yes.
Okay. So let's go to another market structure. That one is that one I always advise that when you see that one now, don't even trade, you run because it's very tricky. You see now, it can make you to let me let me show you that type of market structure. This one. There are times when there are times you enter the market, you enter the chart, you see the market doing something like this, doing something like this, just ranging. You see now, market will just doing something like this. You'll be having this resistance and you'll be having this support, and the market will just be ranging. Market will just be ranging here like this. We call this one a ranging. That's a ranging market, or we can call that consolidation. You see now, that's a ranging market. We can call that consolidation. So far, these are the three market structures. And I will explain it one more time because this is the first thing that I need to know before you even start thinking about trading. That's the first thing that I need to know. These are the three market structures that we trade. Okay, let me explain now again. Then I'll write the names down in case you want to jot it. So this one is an uptrend. Let me write the name. This one is an uptrend. This one is an uptrend. And when you have an uptrend, we are going to have this higher high, higher low. Okay, let me put an example. Let me put abbreviations. Higher high. This H is higher high. Let me put capital letters. This H is higher high. And this one will be a lower low, higher low. HL. This one is higher low. So when the market is in an uptrend, we form this higher high, higher low, higher high, higher low, higher high, and higher low. So another higher high. So when the market from this higher high comes down to higher low and break another structure, and when it's coming back to this support, we call this place, this one a retest. The market is retesting back to the support zone. That's a retest. And that's when the market is in an uptrend or a bullish market structure. So this is what you always see in an uptrend. So after all these drawings, the next one, having the next meeting now, will show you the practical examples in the chat, then on the chat, sorry. I'll show you the practical examples. I'll just come to the chat like that and show you practical examples. Like this one is already an example of a ranging market. This one. So people always feel like the market is too hard. It's not that hard. It's just example of this is a brief example of a ranging market. This is a market ranging. It's not going up, it's not going down. It's just coming up here, come down here, go up here. You see, go up and come back down. This is an example of a ranging market. So when the market is ranging like that, you sell from the resistance and you buy from the support. You sell from the resistance here and you buy from the support until the trend is broken. That's just a simple example of a ranging market. So the next meeting, I'll be showing you examples, practical examples. So for now, need to judge this one, this uptrend and this downtrend. And this is a downtrend. Trevor, I'm talking to you in particular, be jotting. I don't want that you should forget.
I'm judging. I have a question though.
Yes, ask.
You said that you can't. What did you
Oh, ask your question.
say? That you buy in a consolidation. But now, how do you know? Like, if you have to put your stop loss, oh, you put it. Because you
Or
can put it, then it now comes out and then you put the money.
when you want to buy in a ranging, or although I will not be advising you as a beginner to be trading this type of market, but if you prefer to buy, or if you spot it and want to buy, you're not supposed to buy from a resistance. And when you are buying, you put your stop loss behind the resistance, like behind the resistance, put your stop loss behind the resistance, and you buy to the downside, you sell to the downside. And if you want to buy from this ranging market, you put your stop loss below the support. Put your stop loss below the support, and you buy to the resistance side. You see now,
Mm-hmm.
is it clear now?
Yeah, it's better.
Yeah. So this is how you buy and you sell in the ranging market, the mining market that is consolidating. So let me go through the downtrend again. The downtrend is when the market is making, and this one now is lower high and lower low. So this one is a lower low, and this one is a lower high. This one is a lower low, this one is a lower high, lower low, lower high. Let me just mark it. Let me mark it. If you cannot jot and you have your phone, you can just screenshot, because I'll just mark it. This one is LL, LL, lower low, and this one is LL and HL, and LH, lower high. One is lower high. Okay. This is a market forming lower low and lower high, lower low, lower high, lower low. It's going down to the downtrend. And you only buy when this lower low breaks this, when this lower high breaks this lower low and comes back to this resistance before you can buy. You buy from resistance, and before you can sell. So you sell from resistance and you buy from the support zone. These are two things I need to jot. Always sell from a resistance zone and always buy from a support zone. Hey, Diamond, you always buy from a support zone and sell from a resistance zone. Yeah, Ima, you don't see him now.
Yeah,
Yeah, that with the buy, you make sure say the buy now from this support zone.
support.
Yeah, that with the buy, if you knows, first check the trend. When you want to buy, check the trend, whether it's uptrend. If it's uptrend, and you check um this break, whether the higher high is broken, wait for this retest back to the support. Then now you can buy from a support. No can buy for here. If you buy from this middle part like this, you come and you're buying from here. The market can trick you. You just buy, the market will remove your stop loss and go the way down. So these are the these are the three market structures. So now I'm going to write them here in the middle. So that
I just enjoy the Ade.
uh, who is talking?
Yeah, because no, no,
So let me just write the names so that I can snap or screenshot or jot down. You have three types. The first one is you have uptrend slash uptrend O, a bullish market. Then the second one we have downtrend or a bearish market. Then the third one, the last market structure, you have a ranging market. 3. Okay, this thing the Zoom is going to stop for 10 minutes before it opens back. So that's what is going to happen anytime soon. Ranging market. So you screenshot this one. Then when you screenshot this one, you can now master it and master all these names. Then tomorrow now we can have another class, because the thing is, if you over mentor somebody like in one class for too long, the person will be confused. You even forget about the first thing that we did, the candlestick. The first you forget about everything. So it's always good to be taking 30 minutes, and before you realize you already know everything. Favor, Diamond,
Yeah,
Diamond,
yeah,
Yeah,
yeah.
yes,
do you have any
yes.
question? Kado,
Yes.
if you have any question, you can
I
ask.
understand everything.
Because the next thing that we'll be
Okay.
doing now, we'll be doing now about this thing, practical examples.
Okay.
Yeah, we'll not be drawing the lines like this. We'll be doing the practical examples. That's
Okay.
why I'm asking you if there's any question. There are some two
No, no, please.
there are some two people that did not come today, and they don't know anything, no idea about trend lines. So I wanted them to be available. And it's like this now, they want to bring us back. I'll just record the live and send it to them. So Fado, if you catch tomorrow now,
Yes, I did go tomorrow.
yeah, Trevor will be free tomorrow,
Yes, I'm free.
and Diamond.
I'm also free.
I might if now you know say you're active.
Active for
I know say they are the active
what?
now all time.
What are the active?
Okay, then let's meet tomorrow again. Good night.
Okay.
Yeah.
Okay.
Mm.